The exercise price, or strike price, is the core of how stock options work. Let's break down what it actually means for your portfolio. In the world of finance, we call this the strike price. It is the fixed price at which you can buy or sell an asset. If the strike price is $100, that is the agreed-upon price for your contract, no matter what the market is doing. Calls let you buy at the strike price, while puts let you sell. Once you buy the contract, that price is locked in until expiration. The difference is direction. A call is a bet on rising prices, while a put is a bet on falling prices. Investors look at the strike price relative to the current stock price to determine if an option has intrinsic value. Remember that the strike price acts as the anchor for your entire trade. It defines exactly when your contract starts to become profitable. Options involve significant risk and are not for everyone. Research fully before trading. Thanks for watching and subscribe for more basics.